The price of crude oil has dropped nearly 4% this week on the back of worrying financial news out of China. The Shanghai Composite has taken a battering on reports that the nation's banks have cut lending, and there are rumours that the Chinese government is planning to tighten its economic stimulus policy. Oil is now around the $70 mark on concerns about demand from China, but domestic analysts and producers predict it could rise to $80 or $90 a barrel. Desley Coleman reports.
The global government stimulus packages have supported demand for commodities and resources. The oil price, which has more than doubled since January, has been a direct beneficiary.
Fundamentally, oil crashed along with most other commodities in the height of the global financial crisis, and like as often occurs in these cases, it overshot to the downside.
Rumours out of China that the government there plans to wind back its stimulus policy sent shudders through the oil spot market overnight. It was a blow for skittish traders that are increasingly focused on an Asian-led economic recovery.
A lot of speculative pressure, a lot of people in the spot commodity markets have actually bought forward, anticipating that this engine room will continue to produce at that 8-9%. And this has sort of created just a little bit of a fault in this expectation, and so we've naturally seen a flood away from the market.
Commodity trader Jonathan Barrett says the current level of demand for oil is being easily met.
We are actually seeing builds in a lot of these primary inputs, and this, in my mind, suggests that the economies are not ready to absorb the amount of production that we're actually putting onto the market.
Reg Nelson, head of oil and gas producer Beach Petroleum, disagrees. He says the lack of investment in the sector is putting the pressure on supply, and says that while the Chinese rumours of a policy tightening are concerning, a strong US recovery is more important.
By about 2015-2020, the important factor is US demand, the US economy, but again, even if OECD and world economies stay relatively flat, the supply problem is going to be the big issue in coming years.
Which Reg Nelson says is the biggest pressure on the oil price.
I think it'll be very volatile, but fundamentally there's an upwards trend. I think it's heading towards $90. After that, it'll really be a question of world economies, demand. If there is any significant increase in demand, and certainly most forecasters like IEA are talking about 1 to 1.5% per annum increase on average over the next 30 years, that is going to put a great pressure on oil supply.
Oil has traded near $70 a barrel for most of the last quarter, and analysts expect it to continue gyrating in the trading band of between $60 to $80 a barrel.